Hey people, I welcome you all to Caroline's Online Academy. So we are trying to we're trying to understand the concepts of accounting for share capital. In the previous playlist, I had, solved small concept problems to help you explain all the concepts that are involved in accounting for issue of shares from CBSE point of view. And I thought it'd be better if I created another playlist for solving and explaining all the previous year board examination questions. So what I did was I compiled all questions from 2018 onwards, all the compartment question paper questions and main board examination question paper questions from the chapter accounting for share capital. And through this playlist, through these series of videos, I'm planning to solve and explain them for you. You got to believe me, my dear children. Most people, before the exam come and tell me that, accounting for share capital is a difficult chapter. They're not able to understand. They get stuck while solving the problems and all that. If you have clarity on what you're doing, and if you have clarity of the concepts that you're using in solving the problems, and if you have a complete understanding of the question that is given to you, it is a very, very easy chapter. It is a chapter in which you can actually easily score marks. So all you have to do is you have to understand what kind of questions are asked. And when you read a particular question in the examination, you got to have a complete understanding of the question that is asked in the question paper. And you need to know what is happening. Actually, there may be a shareholder who's not paid and if there is any excess application money available for him, all of that. So that is what we're going to try to do in this series, in this set of videos. Okay, so I'm going to take up each question, explain to you the question, and I'm going to explain how you can go about solving the question, how easily you can solve the questions. So without further ado, we'll start with the first question. When I was compiling the question paper, questions from accounting for share capital in all of these question paper, I saw that most of the questions that are asked are can be categorized into 5 different types. First is they ask some 1 mark question. It is compulsory for every question paper to have 1 mark questions from accounting for share capital. Sometimes they are theory questions and sometimes they are numerical, but they are not unsolvable. They are actually a small portion of the big problems that you solve. And they are very much from the concepts that we've already understood. So that is easy. And then they tell you to prepare the schedule of a share capital of a company in its balance sheet according to the Companies Act 2013. It's usually a 4-mark question, and you will usually find this question in every question paper. It's not a single question paper that I saw without this question, this 4-mark question, that is preparation of share capital schedule. And then you have a 6-mark question, which is an internal choice between a big pro rata forfeiture and reissue question or a question which only requires you to do forfeiture and reissue. When in the question that only requires you to do forfeiture and reissue, it's actually divided into 2, with each question consisting of 3 marks, totally making up to a big 6-mark question. Understood or not? And then rarely we have other questions which are 3 marks or 4-mark questions that test concepts like calls in advance or calls in arrears in specific. So today I'm going to start the first with you by solving the forfeiture and reissue questions, and we'll first finish the forfeiture and reissue question, and then we'll go to pro rata forfeiture and reissue, and then the preparation of share capital question, and we'll end up solving all the questions from the past 5 years. That is starting from 2018. Now I have taken this question from the main board examination of 2020. It's actually a 3-mark question. It's given as 4 here by mistake. It's a 3-mark question. Let me read the question for you guys. R.P Limited forfeited 1,500 shares of Rahim of rupees 10 each, issued at a premium of rupees 3 per share for non-payment of allotment and first call money. Rahim had applied for 3,000 shares. On these shares, amount was payable as follows. On application 3 rupees, and allotment including premium rupees 5, on first call rupees 3, and on final call balance. Final call has not been called up. 1,000 of the forfeited shares were reissued for rupees 8,500 as fully paid up. Record the necessary journal entries for the above transaction in the books of R.P Ltd. So, in a question in which they start with, they don't give the information like the total number of shares issued and the total number of applications received and all that. They only expect us to solve the they only expect us to pass the journal entries for forfeiture and reissue. You see, in this question, they only talked about the shares held by Rahim and the applications made by Rahim, whose shares were forfeited, right? So they only expect us to, solve that part, pass journal entries for that part. Every time you start solving a question in the board examination, it's important that you write whose books you're preparing the journal entries, and if it's journal, then to mention that it's journal, and if it is ledger, then to mention that as ledger. You write the serial number. The format is very important, my dear children. So I want you to follow the format, and then the date, and then we have particulars, debit, credit. So they want us to pass journal entries for only forfeiture and reissue. Am I right, my dear children? And in this case, we see R.P Ltd has forfeited 1,500 shares of Rahim. And this question also involves securities premium. Now, we're not sure if Rahim had paid the securities premium or not. No, you might come back and tell me that, sir, Rahim had only paid application money. So it's obvious that Rahim would not have paid securities premium because that is part of allotment. But you've got to notice, my dear children, this is a pro rata problem. That is, Rahim has been given 1,500 shares, but he had applied for 3,000 shares. Now, what does that mean? He has made some extra applications, and that excess application money would have been utilized for, paying certain portion of the allotment. Would have got adjusted with certain portion of the allotment. So we got to make sure in these kinds of questions, questions of this kind, if that excess application money was enough to cover the entire allotment or a certain portion of allotment or not. So in order to do that, it's important that we do a working note. The working note is computation of calls and arrears. This is a working note that we are supposed to do in all situations where there is calls and arrears for a certain call. That is, in allotment here, we have calls and arrears. Rahim has not paid allotment money and first call money. And you see that it is a pro rata problem. So there might be some excess application money that is available to be adjusted against allotment. If there is no excess application money, then it becomes a very straightforward problem. Rahim did not pay allotment money, so on 1,500 shares, you multiply 5 rupees per share and you get 7,500 as a total calls and arrears of Rahim from allotment, and then 1,500 into 3, 4,500 from first call would be the calls and arrears. That is so straightforward. But it is not a question of that kind. It is a pro rata question in which Rahim has not paid allotment money, but there is some excess application money that can be used to adjust the allotment amount due. Understood or not? So it's important for us to find out how much of that excess money was available to adjust against allotment money due. First, we do excess application. We find out the excess application money per share. Excess application money per share is what, my dear children? It is a total excess application money divided by the number of shares held by Rahim. So we need to first find out the total excess application money. In order to find the total excess application money, we need the total excess applications made by Rahim. If you see in this question, Rahim had applied for 3,000 shares, but he was only allotted 3,500 shares. So how many excess applications has he made? He has made 1,500 excess applications, which is 3,000 minus 1,500. And all the money that he has paid on the extra applications that he has made are excess application. So into 3, which actually is 4,500. So 4,500 is the excess application money paid by Rahim. Am I right or not, my dear children? The excess application money per share would be totally he paid 4,500 in excess. That divided by the total number of shares held by Rahim, which is 3. I'm sorry, 1,500. So that is 3 rupees per share. And then we write the allotment money due on each share. Allotment money due per share. Now, I will directly write 5 here, but in this case, along with allotment, premium is also receivable. Whenever premium is also receivable, in this particular working note, we'll divide that amount receivable, receivable from Rahim, amount due from Rahim as share capital portion and premium portion. So, what I'm going to do here is, under allotment money due, and divide the allotment money due as share capital portion and securities premium portion. Securities premium. You see, share capital is totally 5 rupees was receivable on allotment, due on allotment, out of which 3 is premium. 3 is premium as given in the question. Rupees 3 per share is premium, right? So remaining would be the capital portion. So that remaining is how much? 2 rupees. So capital is 2 and allotment amount due as premium and allotment is 3. Next, we need to find out the amount receivable on allotment. Allotment money receivable per share. Now, why would it be different from the amount due? That is because of the excess application money available. We have 3 rupees excess application money, right? So the amount receivable on allotment will not be 5 rupees because they have already paid extra 3 rupees when they paid excess when they made applications, excess applications. That will be set off against the amount due. So if you see here, 2 rupees is receivable as share capital. We have 3 rupees excess application money. So the entire 2 rupees will be set off. So that will be 0, would be receivable as share capital. Out of the securities premium, we don't have, we only have 1 rupees extra excess application money. So what would be set off is only 2 rupees. Understood or not, my dear children? So allotment money receivable per share is 2 rupees per share, and the entire 2 rupees is actually premium portion. Understood or not, my dear children? So now, total calls in arrears. Total calls in arrears for Rahim is the amount receivable from him after setting off the excess application money into the number of shares held by him. That is, the number of shares held by him is 1,500 as given in the question, and 2 rupees is the amount receivable by him. The total calls in arrears for Rahim in allotment. In allotment, this is only in allotment. Is rupees 3,000. And Rahim also did not pay the first call. Am I right, my dear children? So calls in arrears of Rahim in first call would be 1,500 into 3 rupees. Now here we don't do all that excess application money set off and all because there is no excess application money available for Rahim in first call. All the excess application money available was only 3 and allotment money due was 5 and that 3 was consumed by allotment itself. There is no extra application money available in first call. The total calls and arrears of Rahim. Calls and arrears of Rahim would be 3,000 plus 4,500, which is 7,500. Now you might wonder why I haven't taken the final call here for computing the calls in arrears. I have not taken the final call for computing calls in arrears because it is clearly stated in the question that final call has not been called up. It's clearly stated in the question that final call has not been called up. Now, once we are done with this, it's very, very easy to solve the question after this point. So we have premium in the question, and you know very well that the premium is, premium has not been paid. Certain portion of the premium has not been paid. The premium receivable was 3 rupees. Out of that, the excess application money only helped us set off 1 rupee. So remaining 2 rupees was not paid, and 1 rupee was paid. Now for forfeiture, the journal entry for forfeiture, you know very well that if premium is involved, you got to ask yourself if securities premium has been paid or not. In this question, certain portion of the securities premium has been paid, while certain portion has not been paid. Like 1 rupee has been paid, whereas 2 rupees has not been paid. When securities premium has not been paid, that account will also be debited. So securities premium account debit, share capital account, equity share capital account debit, equity share capital account debit, because Rahim did not pay, right? So, and we are forfeiting, and for forfeiture, the journal entry is equity share capital to share forfeiture to calls and arrears. In case premium has not been paid, then that will also be debited. So the journal entry, securities premium account debit, equity share capital account debit to share forfeiture account to calls and arrears account. Rahim's shares forfeited. Now, the amount to be debited and credited in each of this is very simple, my dear children. Number of shares forfeited into the amount of securities premium that has not yet been paid by Rahim. We found out that out of the 3 rupees that was receivable on allotment as premium, we only had 1 rupee excess application money, and Rahim had not paid anything else for allotment, which means 2 rupees has not been paid by Rahim. So that you multiply and type here. That will be 1,500 into 2, which is 3,000. And equity share capital is debited with the amount called up, but not at, amount called up per share. Understood? In this question, you see that only final call has not been called up, which means that first call, second call, and first call allotment and application money has been called up. That is 3 plus 5 plus 3, 11 rupees. But out of the 11 rupees, premium is 3 rupees, right? So the amount called up as share capital is 11 minus 3 rupees premium, which is 8. Understood or not, my dear children? Totally 11 rupees was called up. Out of that, 3 rupees was called up as premium. So the amount called up as share capital is only 8 rupees. Equity share capital has to be debited with the amount called up as capital multiplied by the number of shares forfeited. There will be 1,500 into 8, which is 12,000. Now we've already computed the calls and arrears of Rahim to be 7,500 in the working note, right? So you fill that in 7,500 against calls and arrears. So what would be your share forfeiture? Share forfeiture would be the balancing figure. That is 15,000 minus 7,500, which is 7,500. So now with that, we have passed the journal entry for forfeiture. That's it, my dear children. It's very simple once you do the working note and find out the calls and arrears of the person whose shares have been forfeited. Once you've done that, everything else becomes easy. See, you got this information, this 3,000 information also from our working note only. Am I right, my dear children? See, we found out that 2 rupees of securities premium has not been paid. And so from the working note only, we found out that that was also not paid. And the called up value has been given in the question itself. They said that the final call has not been called up. So 11 rupees was called up in total without excluding the final call. But out of that, 3 was premium, and therefore remaining 8 rupees has been called up. 1,500 into 8 gives us 12,000. And then in the credit side, we have calls and arrears and share forfeiture. We've already found out the calls and arrears of Rahim to be 7,500. So share forfeiture account will be 7,500. Understood or not, my dear children? After this question also requires us to reissue the forfeited shares. Now, over here, if you see, the reissue is not complete reissue. We have forfeited 1,500 shares of Rahim, but we are only reissuing 1,000 of the forfeited shares. We are only reissuing 1,000 of the forfeited shares. 4 rupees, 8,500 as fully paid up. We are reissuing for rupees 8,500, but as fully paid up, which means what? Fully paid up means it is face value paid up. What is the face value of one share? 10 rupees per share. If 1,000 shares are considered as fully paid up, then what are we considering the amount paid up to be as? It is 1,000 into 10, which is 10,000. But we are reissuing for 8,500, but we are considering it as 10,000 paid up, which means what? We've given a discount of 1,500. Understood or not, my children? Whenever there is discount, the journal entry for reissue is bank account debit, because we are receiving money in the bank, so bank account will be debited. We have given discount, so share forfeiture account will be debited. And then calls in arrears. Sorry. Equity share capital account. We reissue shares. Share capital has to be credited. So equity share, because it's a liability, is increasing You know the logic from the concept problems that I've already taught. 1,000 of Rahim's shares reissued. We have reissued for 8,500 rupees as fully paid up. Fully paid up means 10,000. How did we arrive at that? Fully paid up means face value paid up, and we have reissued 1,000 shares into 10 will give us 10,000. Understood or not, my dear children? And the share forfeiture account will be debited by the balancing figure, which is 1,500. And 1,500 is the total discount given by us on all the shares that we reissue. All right. Now, whenever we reissue, there might be some profit on reissue, and we're supposed to account for the profit on reissue by transferring it to capital reserve account from share forfeiture account. Share forfeiture account debit. Sorry. To capital reserve account. The amount that has to be transferred to capital reserve is the profit on reissue. Profit on reissue transfer to capital reserve. Now, when there is a complete reissue, profit on reissue computation is very simple. That is profit on forfeiture, which you credited to share forfeiture account. Profit on forfeiture that you credited to share forfeiture account minus the loss on reissue that you incurred while reissuing the shares will give you the profit on reissue, which has to be transferred to capital reserve. But if it is a case of partial reissue like this, like we have forfeited 1,500 shares of Rahim, but we are only reissuing 1,000 shares of Rahim. So it's a case of partial reissue. Whenever there is a case of partial reissue, it's important that we do a working note. Working note, computation of profit on reissue. It's important that we do this working note. It's very simple, my dear children. First, you find out the profit on reissue per share. Profit on forfeiture per share. The profit on forfeiture per share here is the total profit on forfeiture is 7,500. Am I right? The amount credited to share forfeiture account on forfeiture is the profit on forfeiture. The total profit on forfeiture is 7,500. That 7,500 will be divided by the total number of shares forfeited in order to find the total profit on forfeiture. So 7,500 divided by 1,500 gives you 5 rupees per share as the profit on forfeiture. Then we find the loss on reissue per share. And we subtract that from the profit on forfeiture per share to arrive at the profit on reissue per share. The loss on reissue per share also is not given straightforward in this question. You see, while reissuing, they're saying that they incurred a loss of 1,500 rupees. That is, the shares were reissued for rupees 8,500 as fully paid up, which means as 10,000 paid up, which means that 1,500 has been incurred as loss. Am I right? And the 1,500 loss is on the 1,000 shares that we have reissued, not the 1,500 shares that we forfeited. It's on the 1,000 shares we reissued, and therefore the loss on reissue per share will be 1,500 divided by 1,000, which is 1.5 rupees. Understood or not, my dear children? Now you reduce the loss on reissue from profit on forfeiture per share, and you can get profit on reissue per share. The profit on reissue per share in this question is 5 minus 1.5, which is 3.5 rupees. And therefore, the total profit on reissue this time is the 1,000 shares reissued multiplied by the profit on reissue per share, which is 3,500. Understood or not, my dear children? And that is the amount we can transfer to capital reserve. The only thing that you got to understand here in order to solve the journal entry, pass these journal entries are, because the journal entries are very simple by themselves. You can just mug them up and then pass them. In order to arrive at the correct amount, you need to do two working notes. The first working note is done whenever there is calls in arrears, like in this case, there is calls in arrears for Rahim in allotment, and there is some excess application money available to be set off against that particular call. In this case, in allotment. You do this working note for computation of calls in arrears. You arrive at the total calls in arrears, keeping in mind the fact that there might be calls in arrears for the other calls that are made after this working note also. So we did added the calls in arrears for the first call also and arrived at the total calls in arrears of Rahim. And in this, while solving this working note, we also find out the fact that Rahim has not paid 2 rupees of securities premium along with allotment, but he has paid 1 rupees of premium. If you don't do this working note, you will by mistake multiply 1500 with 3 rupees and write this as 4500, which will make the entire question wrong, entire thing wrong to you. So you got to be careful. You got to do the working note while solving the problem. And then the share forfeiture entry is very simple when you know that premium has not been received. Security premium account will be debited, share capital account will be debited, and share forfeiture account will be credited, and calls and arrears account will be credited. Securities premium account will be debited with the amount of premium called up but unpaid. Share capital account will be debited with the amount of capital called up but unpaid. Share forfeiture account will be credited with the amount paid up by the shareholder, and calls and arrears will be credited with the amount of calls and arrears. In this question, we computed calls and arrears. We could easily compute these things as it was given in the question, and therefore share forfeiture is the balancing figure. And then you pass a journal entry for reissue. You find out the amount of loss here. This shares have been reissued at a discount, as you can clearly see. They've reissued the shares for rupees 8,500 as 10,000 paid up, so there is a discount of 1,500. And then for the last journal entry, we'll have to do another working note, that is to find out the profit on reissue that has to be transferred to capital reserve. In a case of partial reissue, like 1,500 shares have been forfeited, but 1,000 shares only have been reissued. You see, you cannot completely transfer you cannot transfer the amount by just reducing 7,500 from 1,500. 1,500, the loss on reissue from the total share forfeit 7,500 and raise 6,000 here, because it's a case of partial reissue. We'll have to do the working note. We find the profit on forfeiture per share. We know that we credited 7,500 to share forfeiture account during forfeiture of 1,500 shares. So the profit on forfeiture per share is 7,500 divided by 1,500, which is 5 rupees per share. The loss on reissue per share is 1,500 divided by the 1,000 shares reissued, which is 1.5. So the profit on forfeiture reissue per share is 3.5, and the total profit on reissue is 3,500. That is 1,000 shares reissued multiplied by the profit on reissue per share. You see, my dear children, once you understand these two working notes clearly, it is very, very, very easy to solve this problem. I'll fetch you 3 marks in no time. It has taken so much time for me to explain the question, but if you had to do it in the exam by yourself with a proper understanding of all of this, it is actually very, very easy to solve this question, my dear children. So we'll be solving more questions also in this series. Similar questions will also be solved in the upcoming videos. So you please subscribe and share it with your children who are studying and preparing for CBSE board examination. We'll see you in the next question, my dear children. Till then, it's bye from me. You people take care and study well.